And European gas prices are flashing red once again. LNG futures start €62 or about $70. And this is per megawatt hour on July 22nd, the highest since the Iran-Israel conflict rattled markets earlier this year. It is up nearly 50% from June's 40 to €42 range. And the reason isn't a new supply shock, it's a bidding war that Europe is losing. Kepler data shows that Europe's July LNG imports falling just 6.9 million tons, the lowest in September 2024 and down sharply from 8.72 million tons a year ago. Asia, meanwhile, is heading towards a six-month high of roughly 23 million tons. Up 6% year-on-year, Asia's imports are poised to hit a six-month high in July, while Europe's imports plunged to their lowest in nearly 2 years. The US angle is critical. South Korea alone is expected to receive 870,000 tons of US LNG in July, the third highest on record. Asia's total US LNG imports are set to hit a record 4.23 million tons, roughly triple February's levels. And Europe's American gas intake, by contrast, it has dropped to its lowest since November 2024. And this is pure price arbitrage. North Asian spot LNG climbed to $18 in early July from $16.40 the week before. That was enough to pull cargoes away from Rotterdam and Zurich and towards Tokyo and Shanghai. The stakes rise heading into winter. European storage sits 158 terawatt hours below seasonal norms, about 22% above average. And that comes right as the EU moves to phase out Russian pipeline gas entirely by November 2027. Brussels insists that there's no supply security emergency yet, pointing to spare regasification capacity. But spare capacity means nothing if the cargoes go elsewhere.